Hey everybody, this is Paul doing a quick video on, just markets and everything that's going on since the last time I did a video. So basically, as I stated before, current plan is from the 1st to the 13th-ish, give or take a little. Add to BBN after the 13th, add to O, and then kind of rinse and repeat until I hit these targets that you see on the screen here. It's going to kind of vary a little bit because, like prices of stocks and whatever change. So as you can see, so this is a screenshot from March 31st here, the beginning of the month. Now we're at the end of the month. So for O, I started the month at 303 shares. Now I'm at 331, and which will pay me 85. And at the beginning of the month it was 78. And then for BBN, I did add a little bit today. So BBN's where the big changes are going to be because there's just so much being deposited in there, and it's so easy to build up shares in that. So 1850, 2038 as of like a few seconds ago. Because I added another 100 because I had a really good shift on DoorDash. So 188 shares. Hopefully, if I can continue that, I only need so at the beginning of the month, also you can kind of also see the price of BBN where it was at 1634 versus 1553 now. So this is what I'm talking about. It's going to vary. So to give you a general idea, you can kind of see. So right now the price is lower because I'll go into that further in the video, but just rates are higher. So the price of the municipal bond gets affected because everybody wants to be in those bonds, not these bonds. So 188 shares a month, so 2704 minus 2038, and then you just do the simple math. So 3.5 months, I'll be hitting that goal, which is pretty major if you think about it. And that's if the price doesn't go back up. If they decide to cut rates or whatever in June or whatever, BBN would go up a lot, so I would need less shares, which means, but I would still add as the. So I'm looking at 3 to 4 months to hit my goals there, which is pretty cool. Which is really cool. So I'm gonna try and pile as much money, like I said, and then also for O, kind of a similar situation. Probably right now it looks like about 30 shares per month, so you can kind of do the simple math there. So about 3 months too, and then after that it's all Jeppy all the time, all Jeppy. That's gonna be fun. That's gonna take a long time. 'Cause that's a $56 thing. So even if I make 100 in a day on DoorDash, it's still only one share, so maybe 30 shares a month. That's gonna take a few years. That's gonna be. I won't even have to talk about this much anymore. But by that point, we'll have the little dividend snowball going here. So as of today, I had $337 worth of dividends payout, give or take a little, between the IRA and between the portfolios here, and I still got some from Schwab that'll pay out tomorrow. So you can see for BBN, I mean, I basically had close to 187 payout today. I think a BST, I think was about 105 or about 105, and then BST Z 40ish, give or take. Yeah. So yeah, definitely a pretty sizable amount. So the number that goes on this video is probably going to be that one right there, which is 600ish, 900ish below where we were before. And then I can just kind of show you what's going on right now. As you can see, there's a little bond sell-off going on because they basically put out the amount that they were going to borrow in the third quarter, I believe we're in, or third quarter we're about to go into here. It's like 500 billion, so it's going to drain a lot of liquidity from the market. And then also, that's pretty much what's going on. Um, so stocks are down. There are a few predictions going on right now. I don't think they're right, but I don't really track stock prices. But if you do, so basically, there's a lot of debt being issued. So there's guys like Andy Constant who have pointed out before who think that that's going to affect the market in a pretty significant way. So we could see a sell-off. So if you're in a buying mood, the next 3 months can be pretty good for you. But if PCE, like, you know, if PCE keeps coming down, So I guess this is a good chart to use. This is the chart right here that everybody's been using. But like, if PC continues to come down towards the target, you know, where do we end up at basically? But in the meantime, while we're waiting for inflation to come down, we have corporate earnings that are coming in looking like this. 81% are beating estimates by an estimate of 9.1%. This is Jury and Timmer, a very respected economist. So you have different conflicting narratives going on right now. Some people think that the amount of debt issuance is going to break the market. But then we have the actual stock market earnings, whatever, that are coming in really good, that are still strong. So Conks, this guy right here, I would recommend following this account. I'll retweet this myself on my thing. But this is what QRA is. Quarterly refund announcement. So this is that thing about like the debt issuance and that kind of stuff. I would recommend reading this right here. Like stealth liquidity squeeze. Some of the stuff is sometimes very technical. But it's extremely detailed. It's extremely detailed. It's a very, very good paper that just breaks down everything you could possibly want to know about like debt issuance and how it affects the market and how it transmits. And they are correct. Like this was put out in 2023 and is still completely accurate. Completely accurate. So if you want to understand all this QRA stuff and how debt issuance might be affecting the market, that's what I would read right there. This would be the go-to paper on like understanding why this market is doing what it's doing. Also, tomorrow Powell has a preference conference, so we don't get anything else out of this meeting. The only thing that we get out of this meeting is going to be his thoughts on the economy, and that could be a big thing. So if he says that they're going to say, so if he comes out and says we're going to slow down QT, which is quantitative tightening, which means that they're selling bonds back to the Treasury, who then has to finance that debt. The Fed's basically like, hey, here's your stuff back. We want our money. They have to issue debt to make up for that. It's in theory they're supposed to be trying to roll it off, and as things just kind of roll off naturally, as like a mortgage is paid off or whatever. But you can't. They're trying to do like 90 billion a month or something. It's becoming hard for the Treasury not to have to issue just massive amounts of debt to keep up with the 7 trillion sitting on the Federal Reserve's balance sheet right now, or some insanity that they're trying to wind down from the pandemic. Um, we're talking years and years of trying to get this done, and I don't think it's going to happen before the next recession. But because the next recession, they're going to have to run it back up. So we're getting just different things. So this right here is basically what the market is starting to price in, and the market is starting to price in possibly. So right now the market is only priced in one cut. Right here, see it right here, December 2024, and that's it. That's where we're at. That's why the market is doing what you're seeing right now, is because inflation's not coming down, and when inflation doesn't come down, those reports come out. This is what you get. Now you still have all these little different dots, like probably 2026. We're back down here. It depends on what Powell says tomorrow. If Powell comes out and says we still plan on cutting in June, or we're looking at cutting in June, this all changes. Everything that you see on your screen right now reverses violently in the other direction. Because there will be people that will completely not expect him to say that. So it's May, and if they say they're cutting in June, all of this reverses very, 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 very quickly. And I probably go over $80,000 tomorrow. But if he comes out and confirms this, it's not coming. If he says stuff like it's not coming down as quick as we think we may have to pursue higher rates for longer. That type of stuff, this gets confirmed, and we just kind of sit in this little area right here. These little swings in the market. You be the judge, but it all depends on what he says tomorrow. So that's what we're kind of waiting on. Everything's still coming in really strong, which is why the market can get away with this kind of stuff. So as you can see, Q1's coming in looking like that. Q2's probably going to be higher. Probably, and I think estimate was 2.8% or something like that. You just have a lot of there's just a lot of stimulus in the system from just government spending. Now, I'm of the opinion that that government spending will contribute to GDP in the future. It's not just spending for the sake of spending. It's not like PPP loans or that kind of stuff. It's not like somebody buying a new yacht. It's bridges and different things that are being built and investments that are being made into the economy that will have long-term effects, manufacturing, that type of stuff. Other people are telling him that it's not going to contribute anything. I think they're insane and just extremely stupid because when China did it, they have no problem celebrating it. But I'm not an economist, so I can't sit here and argue with these people because they don't care. So, as you can see, plan stays the same. I'm buying, especially BBN at this price because I already know where it's going to go. If this goes back up to 22, I'm hitting targets way quicker than I thought I would. So, um, with these stock fluctuations and whatever. So as it stands right now for the month of April, $2,195 added to the account, which is pretty much exactly where I want to be. Because if you look at it, right there, 76%. It's above 70%. That's the goal. 70%. That's the goal. Because last year, as I keep pointing out, it was at 55. If I hit that 70%, I'm well on my way. Right now as it stands, it's over $8,995 I've set back this year. Even with like different repairs in my car and stuff that I've had to have, a tire that just had a hole in it. I should have documented that right here. But I had to get a new tire recently. That was 120 something dollars. I think that was probably this week. But I had a pinprick or a nail in one of my tires that had to get replaced. So I should document that right there. But just different things like that are going on. So like I said, I would recommend following certain accounts on Twitter because they just put out really, really quality information. And I think that's where we're at. Like I said, the plan, like I said, I'm in BBN mode right now. By the 13th of the month, I'll be back into, O mode and then just rinse and repeat until we get to where we need to be. So let me know what you think. Leave a comment, of course, and have a nice day.